Hello and welcome to another video on accounting. We are continuing our series of videos on accounting cycle. This is the third video in that series. So in this video we will talk about adjusting entries, preparing adjusted trial balance, and preparing financial statements. Our main topic is going to be preparing financial statements. I have covered adjusting entries in other videos, but we'll give you a summary here so that to reinforce the learning process. So if you have watched the previous two videos on the accounting cycle, you will recall the accounting cycle is the steps followed by the accountant to prepare financial statements. And there are 8 steps. In our first two videos, we talked about the first and the second and third step. In this video, we are going to talk about adjusting entries, preparing adjusted trial balance, and preparing financial statements. Um, so as a reminder again that I have a complete series of videos on the adjusting entries on the channel. So do watch that for a comprehensive understanding of the topic adjusting entries. Here I'm going to give you a summary of what adjusting entry means so that we can prepare an adjusted trial balance. So in our previous video, we prepared the T accounts and balanced those T accounts to prepare the trial balance. That trial balance is known as the unadjusted trial balance. We prepare that so that we can prove that our debits equal our credits. We don't want to go ahead unless we have proven this, because if we find errors, we need to find errors as early as possible so that we can correct them before we take the further steps. So this unadjusted trial balance is prepared first. So to find out if there are errors, and we can correct those errors in our journal in posting. So if there are no errors, the next step would be to adjust the trial balance. So one of the adjustment is going to be done, by the way, adjustments will be done at the end of the period whenever the financial statements are prepared. So in this case, we are preparing financial statements at the end of January. So we are going to make adjustments on that date. So one example of the adjusting entries is the prepaid rent. Now, prepaid rent is a rent that is paid for in advance. Now, if you have watched the other videos, you will know that MH Law paid for 6 months rent in advance in January, at the beginning of the January. Now that MH Law has used 1 month of office space, now anything that is used in accounting becomes expense. So we need to record that expense and adjust the balance of the prepaid rent account also. We can do that using this entry. So we will debit the rent expense $2,000 for the usage, to record the usage of the office space, and credit the prepaid 2,000 so that we can update the balance of the prepaid as well. Now the T account before the adjustment looked like that, and we had a balance of $12,000 there, and we need to open another account, another T account for rent expense, and now we will post the above adjusting entry. So we are going to debit the rent expense with $2,000 and credit the prepaid rent with $2,000 here. Let's calculate the new balances. So the new balance in the prepaid account, prepaid rent account, will be $10,000, and the balance in the rent expense will be $2,000. These two balances now have to be moved to the trial balance so that we can change the unadjusted trial balance to adjusted trial balance. So let's update those balances. So the prepaid rent account will become $10,000, and for the expense we are going to record that expense as $2,000 here. So this is one example of an adjusting entry, so that is done so that we can adjust the trial balance. Let me give you one more, and this has to do with the furniture. Furniture is an asset in the business that we'll use for a number of periods. So as it is used, part of it should become expense, which we call depreciation expense. Again, I have a complete video on depreciation on the channel, so you can watch that for more information. So since we are using this furniture, we need to record the usage and adjust the balance as well. So that will be done again through an adjusting entry at the end of the period. So we will debit depreciation expense for the usage of the furniture. $82 is for 1 month. And we will credit accumulated depreciation furniture $82 there. We do not credit the furniture account because accounting principles tell us to keep the original cost of the asset intact and reduce it through accumulated depreciation, which you will see how we reduce that. So when we do that, that adjusting entry, we need further accounts. We need an accumulated depreciation account. We are going to credit that with $82, and we need a depreciation account which we are going to debit with $82 here. Let's balance these accounts. So now these balances will be reflected in the trial balance. So we are going to copy that. So now you can see that the new accumulated depreciation furniture is accounted for as a credit in the trial balance. And finally, we are going to also update the trial balance for the depreciation expense here, $82 as a debit. Now this after these adjustments and some other adjusting entries that we do, the trial balance now becomes adjusted trial balance, and we will call this adjusted trial balance. Once we have made the adjustments, it is time to prepare financial statements, and that's what our main topic is for the day. Now before I go on to show you how to prepare financial statements, let me give you what financial statements are and the types of financial statements. So the first thing is, why would we need to prepare financial statements? Well, we need to prepare financial statements so that we can provide information to creditors and investors. Investors and creditors need our financial information so that they can make their decision. For example, investors will make their decisions to invest in the business or not. Creditors, such as banks, will use the financial statements to make decision on whether to give the business a loan or not. Now, so we need to give these two users and other users information about the company resources, that is the assets of the company. We need to give them information about who has the claims to those resources. So how much of those claims are by the owners of the business and how much are the claims to the assets of the business by the creditors. We need to give them that information. And finally, we need to give them information about the ability of the company to earn profit and to generate cash. So since we are giving them many types of information, so we have many types of financial statements, and there are 4 of them. Starting with the income statement, then we have the statement of owner's equity, a balance sheet, and finally statement of cash flow. These are the 4 statements that an organization must prepare at least once a year, but they will prepare them more regularly on monthly basis. Each of these statements provide the investors and creditors specific information about the business. So income statement will show how the company used the resources to generate or earn profit. So on this statement, we are going to show the revenues of the business and as well as the expenses of the business. Revenue minus expenses will give us the profit or loss of the business. On a statement of owner's equity, we need to show the changes in the owner's claims to the business. So owner has claims to the assets of the business, and we want to show how those claims have changed, what has increased and what has decreased those claims. Balance sheet will show the company resources, that is the assets of the business, and as well as the claims to those assets. So the claims to those assets are by the owners. So we will show the owner equity on the balance sheet, and the claims are also by the creditors. So we will show the liabilities on the balance sheet as well. So balance sheet essentially lists the assets, the resources, and the claims to those assets, liabilities, and owner equity. Finally, statement of cash flow. Cash is an important asset. It has its separate statement where we show the sources of the cash coming into the business and the uses of cash by the business. So those are the four statements that every organization, business organization, will prepare. Now, these statements must be prepared in a specific order. So we need to prepare the income statement first. The reason for the order is because the end result of each statement is needed to prepare the next statement. And you will see that in our today's lecture here when we go on to the section of preparing financial statement. So we need to prepare the income statement first, then prepare the statement of owner's equity, and finally we will prepare the balance sheet. Statement of cash flow we are going to prepare in a separate video, but in this video we are going to concentrate on preparing these three statements. So again, we prepare income statement first, followed by the statement of owner's equity, and finally the balance sheet. So let's prepare the income statement. So again, we have our adjusted trial balance here. The first thing to do to prepare an income statement is to write down the heading. You write the name of the company, the name of the statement that you are preparing, and write down the period for which you are preparing this income statement. Then you are going to write the heading called revenues. Once you do that, the next step is going to be copying information from the adjusted trial balance onto the income statement and organize it in such a way that investors and creditors can understand it easily. So let's look at the trial balance and find the figure for revenue. So you can see we have a figure for legal fees revenue. We are going to copy that heading from the trial balance. Next, we are going to copy the amount from the trial balance, $8,900. Now we have copied the revenue. So on an income statement, we show revenue and expenses. The next part is to copy the expenses section of the adjusted trial balance onto the income statement. So we start with the heading called operating expenses and go back to our trial balance and copy all of these expenses that we have here on the income statement. So we'll copy salaries, rent, depreciation, and tax expenses together with their amounts. So we copied these four expenses from the trial balance. We will put a heading called total expenses. Now we are going to total all these expenses here. So these four expenses will be total to give you total expenses of $3,532 here. Now finally, we need to calculate the profit or loss for the business. So we will put in a heading profit and then we are going to subtract our expenses 3,532 from our revenues of $8,900. Since our revenues are more than our expenses, it will give us a profit. So the profit is $5,368. Revenue minus expenses give you profit. So your income statement will look like this here. So again, all we need to do is copy information from adjusted trial balance on and organize them so that it is easier understanding for creditors and investors. So once the income statement is done, we go on to prepare the second statement, the statement of owner's equity. So again, we start with the heading, name of the company, the name of the statement, and the period for which you are preparing the owner's equity statement. Now, we prepare owner's equity statement to show changes in the owner's claim to the business. In other words, what increased the owner's equity or claims in the business and what decreased it. Now, so we are going to list that on a piece of paper and here and organize it in such a way. Again, the information will come from the trial balance So we are going to look at copy that information. The first thing that we're going to copy is the account name, capital Mark Hayden, January 1st. And the balance is going to be 0 here. Since this is our first month of business, so there is no previous balances in the capital account, this will be 0. However, if it was our second month of the business, so this capital Mark Hayden January 1st will show a balance from the previous month, the December month. So since this is our first month, we have a 0. Now, what increases the owner's equity in the business? Well, if it is investments by the owner. So we will add investments by the owner. Let's go to the trial balance again and find the investment that the owner did in the business during the month. So, and copy that figure here of $80,000. The other thing that increases the owner's equity is the profit the company makes. So we just calculated the income statement. We will copy the end result of that statement here. So the profit figure from the income statement is $5,368. Copy that here. So again, this illustrates the link between the financial statements. Remember to prepare the income statement first because we need the end result, the profit or loss, from the income statement to prepare the statement of owner's equity. You cannot prepare statement of owner's equity before the income statement. So the order is important. Now this is what increases the owner's equity. And now let's look at what decreases the owner's equity. The thing that decreases the owner equity is drawings. So we will put in a heading less drawings. Go back to the trial balance and find the drawings for that and copy that figure here. So again, we are just copying figures from the trial balance and organizing them on a piece of paper, for example. So once this is copied, we are going to give it a heading called change in equity. So what was the change that happened in equity during the month? And that means we are going to add these figures to give us a change. So investment by the owner plus the profit for the month and minus the drawing will give us a change in the owner's equity of $85,043. Finally, let's add the figures to calculate the total owner's equity at the end of the month. So we will start with the heading capital Mark Hayden January 31st. So look, we started with capital Mark Hayden January 1st and now this will be January 31st. And we are going to add the opening balance, January 1st balance, and the change in equity to give us the closing balance in the owner's equity of $85,043. So this is how our statement of owner's equity will look like. Again, it shows the changes, increases and decreases in the owner's equity. In this statement, the Mark Hayden's owner's capital increased by $85,043 during the month. All right, so finally we are going to prepare the balance sheet. Again, we will start with the heading. So the heading would be the name of the company, the name of the statement, balance sheet, and the date at which we are preparing this statement. Now the date for the balance sheet will be different from the date of the income statement because the balance sheet is prepared at a specific point in time. So again, on the balance sheet we list our assets of the business, that are the resources of the business, and the claims to those resources. The claims to those resources are by the owners. So we will list the owner equity, and the claims to those resources can be by the creditors. So we will list liabilities. So we are listing assets and liabilities and owner equity on this statement. We will start with our assets. So we'll go back to the trial balance and list all our assets first. So these are the assets of the business and we are going to copy them. Starting with cash, prepaid, account receivables. So those are listed. Now, one of the assets is furniture also. Now, I'm going to list that thing because furniture is a long-term asset and it has an associated account, cumulative depreciation. So this should be presented like this. Put in a furniture account and the value of that, copy that from the trial balance, and copy the accumulated depreciation by subtracting it from the furniture to give you a net value for the furniture of $4,818. So accumulated depreciation is used to reduce the balance of the furniture here on the statement. So now we are going to total that, total our assets, which means we need to add these figures, and that will give us a total of $111,293. So ImageLaw has resources or assets of $111,293. Now, in the next section, we are going to list the claims to those resources. The claims are by the creditors, liabilities, and the owners, which is called owner equity. So we will start with the heading, liabilities in owner's equity, and we are going to list the claims of the creditors, or in other words, list our liabilities. So we will write a heading liabilities and go back to the trial balance and find our liabilities in the trial balance, and all we need to do is copy them right here. So let's copy those three liability accounts. Now, once we have copied them, we are going to total those. So the total liabilities of the business are $26,250. So this means that the creditors have claims to the assets of the business, and their claims are worth $26,250. The rest of the claims to the assets will be from by the owner. So we need to list the owner's claim also, which is next. So again, we are going to write a heading called owner's equity. And now we are going to bring the balance of the owner equity from the statement of the owner's equity. So here is the statement of owner's equity that we just prepared in a few minutes ago, and the end result of that statement will become part of the balance sheet. This should again show you the link that the linkage between the statements. So we cannot prepare a balance sheet before the statement of owner's equity because we need the ending balance in the statement of owner's equity here. So let's copy that figure here. And now we are going to total our liabilities and owner equity. So the liabilities and the owner's equity will be totaled. Now that claim, the creditor's claim of 26,250 plus the owner's claim of $85,043 will become will total to $111,293. Remember that what the business has, the assets, the resources, must equal the claims to those resources. So the claims by the creditors are 26,250, and the claims by the owner to those resources are $85,043. Now those total assets must equal total liabilities in owner equity. So this is how our balance sheet will look like. Again, all the information will be copied from the trial balance with some headings so that it is easier to read and understand the balance sheet. All right, so here are the financial statements one last time, all three together. And just to remind you the link between the financial statement here. So the ending balance of the profit and loss from the income statement goes on to the statement of owner's equity, and the ending balance on the statement of owner's equity becomes part of the balance sheet. So this was preparing the financial statements from the trial balance. I hope that this video was helpful. Watch this video again and other videos on the channel, and remember to if you like the video, click the like button, subscribe to the channel, and hit the notification icon so that you are informed of the future videos on the channel. So practice and good luck. I'll see you in the next video.